Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you very much for your time. Let's just start with what you make of Jio Financial Services. We had an analyst earlier with us who was saying, well, it'll take time and, it's not going to, the impact on the rest of the listed universe is not going to be immediate. But how are you thinking about this event?
Prashant, the way I think about it is that, your previous guest, his comments were quite astute in the sense that the lending business is the key to Jio Financial Services. And my sense is that there's a huge opportunity there in terms of how large the the below prime market is. I wouldn't call it subprime, that has a negative connotation, but the entire mass of borrowers which are just below the prime borrowers. And we've seen a lot of these small finance banks and home finance companies. You spoke earlier about Canfin Homes results. You look at a lot of lenders and the borrowing ability and the opportunity to borrow for the middle class, for small and medium-sized borrowers in India is still quite large, and it's reasonably underserved, at least in the near term. So if Jio Financial Services can make a go of that, it will be good. And I'm not sure if in the near term it has a very large competitive impact on the industry, because I think the market is large enough for everyone. Having said that, for some of the larger players, obviously it's a moment to reflect and see, because there is a large competitor that has emerged, and they will be looking to see what they do. So I think interesting times, but I wouldn't be too worried in the near term.
Okay, not too worried in the near term for a player like Bajaj Finance, but definitely wait and watch mode as a big player enters the market, right? The financial services space. Got that. By the way, just a couple of more stocks. Polycab continues to hit new highs, so it's once again up about 1.5%. And this entire theme, the home improvement theme, whether it's cables and wires or even ceramics, have been doing very well. So Kajaria Ceramics, for example, is at a fresh 52-week high this morning, up 3.5%, and that stock is up 30% this year already. Ashwini, hi, good morning, and thanks for joining in.
Morning.
How are you feeling about the market at this juncture? Do you think that this is just the start of a multi-year upcycle for the Indian markets, or do you think that a lot of the good news is already in the price?
Sonia, it's a great question, because we've at least in the 32 years that I've been here in the markets, I have not seen a confluence of positive factors like what we are seeing now. It does feel that we are in for a multi-year economic expansion cycle. Now, has the market significantly discounted a lot of the positives in the near term? That's possible. But if investors are willing to look out 2 years, 3 years, 5 years, I think there is more upside than downside. So, even if you look back at the cycle that we had between 2003 to 2007, each year we saw corrections which were somewhere in the region of 10% to 20% at the index level. So, these kind of cuts can happen, and these can come from global developments. It can come from local developments which have nothing to do with the economy. These could be politics. It could be, something else that we can't predict. But the point that I'm trying to make is that it's going to be a positive outlook for the economy for the next 3 to 5 years, and investors would do well to just stay invested and ride out the volatility that is inherent to stock markets.
All right. Hi, Mr. Agarwal. Good morning. What's your view on IT? The numbers were pretty much in line. Some of them were misses, actually, but clearly not as bad as what the street was estimating. Now, there are still challenges going ahead, going by the global headwinds that could lie ahead in FY24. Is this bounce providing a good opportunity actually to lighten your position over here? Or do you think that you would continue to hold positions or maybe make a fresh entry as well into IT stocks?
Nigel, great question. I've been quite flummoxed by the kind of strength that we've seen in the IT names, especially after the disappointments from all the majors. I was sniffing at this sector, as I'd mentioned in our earlier conversations, between April and June, but decided to stay away, thinking that, the June results might offer an opportunity, because I expected them to be weak. So they were weak, as we saw. But the issue seems to be that the US narrative has now changed to one of a soft landing and rates trajectory that to, one and done, which is obviously providing some tailwind to the IT sector. In addition to that, foreign investment flows is what's driving the market, and relative valuations being attractive, relative underperformance being in place, and relatively high familiarity for IT names for large foreign investors is the reason why these stocks have done so well. Having said that, the mid caps actually are doing all right. I mean, a couple of the mid cap names that reported yesterday have actually done quite well. So, the narrative that we saw over the last quarter, where the mid caps actually didn't correct as much as the large caps, seems to tell a story that the mid caps are actually doing quite well. But in the large cap space, honestly, the rally flummoxes me. I was hoping to purchase IT large caps into the correction that I had expected post the results, but that hasn't happened, so I'll stay out for now.
Ashwini, slightly open-ended question in terms of how your view has evolved for newer opportunities where one can put in fresh money.
Prashant, nothing very different. I continue to be fairly positive about the financials and the banks, which has been a big consensus trade. But I'd like to move down the market cap curve there, because I think the overall environment is quite benign. So that's one place where I'm looking for opportunities. The other place is in the whole mid and small cap space, where I think the valuations are still quite reasonable. Yes, you have pockets of exuberance and valuations being stretched, but there are a lot of places where I still find valuations in the early teens, return on capital employed, in mid-teens or high teens, and a pretty decent growth outlook over the next 3 to 5 years. So, mid and small continue to be very attractive, notwithstanding the kind of outperformance that we've seen over the last one quarter or so at the index level, and some really stellar stock market returns from individual stock prices. So that's one area that I'm continuing to sniff at. But also, among the large banks, which have significantly underperformed, my sense is that, for those that are feeling slightly jittery and, don't want to adventure into the small and mid cap space, I think the large banks also offer an opportunity where you can make a 15% compounded return over the next 3 years, from here, which is not a bad return if you think about it. Not making any aggressive assumptions on valuation expansion, just trying to capture the earnings growth. So, there are a lot of places to pick and choose. Very, very interesting market to be in.
Okay, all right. Mr. Agarwal, thanks so much for stopping by and giving us a view on the markets. Look forward to having a chat with you soon. But for the time being, wishing you a good day ahead.